slipping yesterday with the Dow and the S&P posting their worst days since December 20th. Joining us now for more, Sylvia Jablonski, CEO and CIO of Defiance ETFs. Is that right? Did I get that right, Sylvia?
Yes, you did. Good morning, Steve.
All right, good morning. So let's, I don't know how to start here, but the market has been very, very concerned that we haven't had this so-called Santa Claus rally, and all of a sudden the bottom is dropping out of this otherwise great rally we've had. How worried are you about the last 2 days of trading?
Well, I certainly don't love the last 2 days of trading, right? You want to go into the new year with the market rallying after what we saw towards the end of last year, but I'm not too worried about it. We saw that big run up from November until, pretty close to the end of the year. And I think that some investors actually did take a little bit of gains off towards the end of the year and maybe for tax reasons into the beginning of the first couple of days of this year. So it could be just a little bit of an overbought pause. I'm not reading too much into it. I don't think that much has changed in terms of the market from a week ago. And, the reason that we might see a market rally in 2024. So different rate environment, the Fed is no longer going to be hiking rates. Corporate earnings were strong, GDP held up, consumer held up. It feels like we have that soft landing. So I expect this to be a pretty decent year for equities.
With the last 2 days of declines, are we still in an overbought situation, and how do you gauge that?
Yeah, I think it's hard to say whether that, kind of completely wiped out what we saw in terms of just positive sentiment and just, the market getting super excited about the talk of the Fed going into the end of the year about the potential rate cuts this year. So I think the answer is it's hard to say. I think that, a little bit of the froth came off the market, and I think it's a good time for investors who particularly are looking at the Mag 7 to consider buying on these dips. So whenever I see 1% to 2% pullbacks in some of these stocks that just have so much room to run for various reasons, and that is the Mag 7 in my opinion, I do like to kind of dollar cost average in and just hold it for the longer term and not worry so much about whether or not they move down another 0.5% or so before they rally back up another 10 to 15 before the end of the year.
You seem to like some of these well-liked stocks, Google, Amazon, Microsoft. Tell me why you think these are still places where people ought to be putting their money.
Yeah, so I think, on a basic level, all of these stocks have strong balance sheets. I think they've sort of, withheld the rate environment in 2023. If we go back to 2022, these stocks were absolutely crushed. And I think that last year, the range of returns was anywhere from 25 to 250%. On the Mag 7 plus, and the Nasdaq up about 40% or so for the end of the year. So I think it was a bit of a recovery year, and it was just sort of tapping into the opportunity of what is AI and kind of the creator environment. I think this year is going to be more about quantum computing, supercomputing, machine learning, data mining. I think it's going to be the enablers and the users of AI more than sort of the creators of AI. And so I think you still have a big runway in these stocks. They're the providers of things like the cloud, the quantum supercomputers that can actually make AI a reality. They're the providers of the technology that other companies are going to use to employ AI in their services, whether it's healthcare or factories and things like this. So I do think that there's a tangible reason for them to run. And I think some of the names like Google, you're looking at a 20 times forward multiple, a little bit lower than the market. Microsoft has a pretty low beta. And again, these are companies that are just quality companies. Some of them look like value stocks.
And also you like IBM as well, which I think is interesting, because is it time to play quantum computing, or is it still too early yet?
So I think we're just kind of dipping our toes into it, right? So you have what we talked about. I heard you talking about with Christina the chips bill this morning. Well, there's also several $1 billion going into quantum computing by the U.S. There's about 15 billion going in by China. So the investment is starting to go into that space. Companies like IBM are already sort of doing something with quantum computing and monetizing it. So, for example, they work with Cleveland Clinic on providing quantum technology to work with research research on how, proteins affect different cells and drug reactions and things like this. So they're already being used. You have companies like IonQ partnering with Amazon to provide utility quantum computers. So I think that, you have the government, you have a lot of large corporations that are willing to dedicate 5 to 10% of their R&D into this space. So you're going to start seeing some of that money pour into quantum research. And once it's actually, kind of employed and up and running, you get that growth there. So I do think that this is a 2024 to 2030 story. And I think it's the expansion of AI, right? If AI was the hot term of last year, this year it's going to be quantum and supercomputing.